All right. Hey there, everybody. It is just a few minutes after 11 a.m. Central Standard Time here on July 15th, 2022. It's a Friday, guys. I'm Chris Franks with Texas West Capital. Hope y'all are doing well, man. It has been a heat wave here in Texas. ERCOT trying to get us to turn down those, to turn up the air conditioning here in our homes, and many Texans having a little bit of issue with that because it's hot. It's hot. So anyway, hopefully y'all are doing all right. Man, it's not much better over in Houston. I've been over there quite a bit here this year. I was just there last weekend, and man, oh man, it got hot over there. So some of y'all I know live in Houston. I'm feeling your pain. I'm about to move over there and, be feeling that pain even more so with it. So anyway, hopefully y'all are doing all right. What do we got going on? Well, man, oh man, so Celsius, what'd you expect, right? They're filing for bankruptcy protection. Voyager did as well. Three Arrows being liquidated with the, what's their name? The founders there kind of disappearing now. Go figure, right? We've got the Fed hiking interest rates. We got CPI still high, but we've got mortgage rates dropping, right? So what's going on with that? We kind of touched on it a bit before. We'll talk about it a little bit more today. What else we got going on? Man, oh man, we've got the dollar continues to push higher, right? And the dollar right now with its rally higher is a great example of that. Y'all might have heard the quote, that says the market can stay irrational longer than you can stay solvent. And that's just a reminder not to mindlessly ride it one way or the other. Make sure you understand what you're doing, where you're going, understand where your validation and invalidation levels are. It's not good enough just to enter and to sit. Okay, guys, you got to do a little work, especially when you have the market turning around and stuff doing things, that, if it's just a bull market, it's great. You're riding it up. But, as you get to the end of that bull market, it becomes really difficult, right? Yeah, we've got a lot of big companies now. We got JPM, we've got Bank of America talking about this crazy, really bad recession that's going to come in. A little bit late to the game, aren't they? We've been talking about that for the last few years here, leading up to it. Definitely think it's going to be a lot more than a recession, which isn't really good for people in general. But I tell you what, if you're a trader, guys, you can make a ton of money, and that's okay. Don't let anybody tell you, oh, you're so awful making money off people that are getting hurt. You're not making money off people that are getting hurt. Things are happening. You're taking advantage of whatever's happening in a way that best protects you and your family. At the end of the day, guys, nobody's going to care about you more than you, right? Hey there, Nevolution. Good to see you. Martin, good to see you as well. Chance checking in. Data, what's going on, guys? Always good to see you here. By the way, you can join us at howtotradetowin.com. We'd love to have you there. Tier 3 is where it's at. And let me tell you something, man. We've got so much stuff. We've got so much stuff happening here through the end of the year and into next year. It's crazy. We've got one really big thing that I can't wait to tell you about, but I think I'm going to wait a week, maybe two. Our members know about it. They've seen the announcements. They know what's going to happen there, but I think everybody's going to be kind of excited about it. Some of the things we're doing are going to be free. Some of them are going to be paid. Different services, different things, depending on what you're looking for, what do you need help with in your life. But one of the things that I'm going to do, so we've been in business for 5 years now, right? Since 2017. So yeah, going on 5 years in September 11th, be 5 years. And so during this time, I've never done this type of thing before, so it's been a big learning experience for me as well, and I've continued to add on and do all these things and build up. I never expected it to do what we're doing today. I expect to go out there, help some people, and that'd be it. And, the more I did it, the more I enjoyed it. So we've kind of continued to build this thing. And so doing this for the last few years and trying out a few different things, what we're going to do over the next probably 2 months or so is we're going to transition Tier 3 into a group coaching type thing. So, It's going to change a little bit of the way we do it, but not a lot. At least not a lot in any kind of bad way. It'll make it better. But it's more of a group coaching. It won't be individual coaching, but it'll be more of a group coaching type thing, and just better kind of integrating everything that we're doing and adding a few other things in there. So exciting times to be a part of it, guys. Very excited about that. Those of y'all that are in Tier 3, you've seen how we've continued to expand and grow stuff and do things. Now we're just trying to really make it work really, really well for you guys, best way possible. So hopefully that's exciting. I will be doing some individual coaching as well once we get that going. I've probably got the first few months filled up with some Tier 3 members already. That purchase, we gave them an offer for a lifetime subscription, which they've purchased. And so they're a part of that, and that includes some one-on-one coaching in it. But we may release a few more lifetime subscriptions without the one-on-one coaching. So, if that's something you're interested in, hit me up, let me know. And that way I can figure out if that's something I want to do or not. I've always said I would never do a lifetime subscription, but, again, what we do, how it's changing, how it's growing, it made sense. But not a whole bunch, not like hundreds and hundreds and hundreds or anything like that. So it will be limited, just like the ones we release to our members. So anyway, yeah, if that's something you think you might be excited about, you might want to know more about, let me know. It's going to include basically any courses we release, Tier 3 access, which, like I said, is going to become even better with this general group coaching type thing. And just so much stuff. Can you imagine? By the way, we're hiring analysts, guys. Over the next few months, we'll be hiring analysts. And so they're going to provide even more analysis for crypto, stock market, FX, commodities, and more times throughout the day, more products that they're going to, more stocks, more cryptos, whatever they're going to give analysis on as well. So that's coming as well. That's going to be all added into Tier 3 also. So, yeah, man, lots of stuff coming in. Really great. We're going to explode this year. So exciting, right? Anyway, so the other big thing that we've got going on right now is people seem to think, it has come to my attention that people seem to think that CPI is hyperinflation. Holy crap, blew my mind. I was like, I'm sitting here, I made a few comments online, and then I get the silly people, man. Don't be these people, because you end up looking like an idiot, okay? But don't be the guy that goes on there and you have no clue what you're talking about, right? You have no real training or education in it, and you go and you just make lewd comments or ridiculous comments, or you just put like laughing or whatever below somebody's comment who actually has experience and education in the matter, okay? Because what I found out today was people actually think that hyperinflation refers to CPI. Blew my mind, guys. And you know what the thing is, I've been doing this for so long, and I, know so much about it, right? That it doesn't ever occur to me that people, it rarely occurs to me that people just coming into it might think something different, right? But it absolutely blew my mind. So if you are of the mind, or you had been until this point, that hyperinflation has to do with CPI, that's what he's right. If CPI is rising, that means hyperinflation, right? Because people say, oh, CPI is inflation, right? Numbers rising, it's inflation number, right? If that's what you thought, stop immediately. It is not the same thing. Hyperinflation is a specific event that occurs that has to do with money, okay? They're talking about hyperinflating the number of the amount of fiat out there. See, and that's the problem, because inflation is actually refers to inflating, growing the money supply. It doesn't actually, originally it doesn't actually refer to prices rising or falling. You can't inflate, you can't make more prices, right? You make the price rises or it falls, right? So that's not inflation or deflation technically, but the government's come in here and used all this. And this is the problem. It confuses y'all. Y'all start thinking, oh my gosh, all these things. But it's because it's confusing terminology. It's not realistic, right? So inflation technically refers to, has always referred to the money supply, right? It inflates. You add more dollars, right? Or it deflates. You take dollars, right? QE, quantitative easing, inflates, right? It prints more dollars. QT, which is what we're doing since last month now, for just about a month right now. We're down about 30, the Fed has sucked up $30 billion back out of circulation. So QT, quantitative tightening, is deflationary, right? It sucks that money out of the system. How do they do that? They take their bonds, their government treasury USTs, which is pristine collateral, right? Their MSBs, the mortgage, or MBSs, the mortgage-backed securities, and they sell them back out on the market. And so people buy those because they're, like I said, pristine collateral, right? And so those dollars they spend, it goes right back to the Fed. It goes right back in the Fed. Guess what? It doesn't come back out, guys, like that. So that's what quantitative tightening actually does. Quantitative easing, again, is printing it. Now, hyperinflation refers to a significant increase in the money supply that is not met by demand. So you're talking about like 1,000% consistently, multiple months. That's hyperinflation, okay? Guys, we are nowhere near a 50%, 100%, whatever, 40%. We're nowhere even near that. So we're nowhere near 1,000% plus on consistently monthly basis, right? As a matter of fact, the issue more is dollar liquidity across the world, right? And so the fact is, I think it was the Bank of Pakistan was having trouble because they're like, holy crud, we can't get the dollars that we need because there's a dollar a liquidity issue, right? They couldn't get their hands on the dollars that they need. And so this liquidity issue becomes worse as the value of the dollar rises. As that DXY continues to climb, it becomes more and more expensive for countries and multinational companies and whatnot to get the dollars they need to pay back, basically to pay back the loans they've taken out. Remember, if you take out a government loan, from the U.S. here, right? If you take out a loan there, you've got to pay it back in U.S. dollars. If you're a U.S. citizen, you have to pay your taxes in U.S. dollars. So let's just start right there real quick and say, listen, if you say that fiat is nothing because it's not backed by anything, blah, blah, blah. Well, fiat in the U.S., the U.S. dollar, has a requirement. It doesn't just get printed out of nowhere, right? It has a requirement. You have to use U.S. dollars to pay U.S. debt. You have to use U.S. dollars to pay U.S. taxes. Okay? So it's not just sitting out there and, people don't have to use it. No, they have to use it. It has a function. I guess what I'm trying to say, right? So hyperinflation is this whole other thing, guys, which has little to do with CPI and much more to do with lack of demand while excessive printing goes on. Okay? Realistically, we could put as many dollars into the global financial system as we wanted, as long as the demand for those dollars continues to be there. And the demand is very much there right now, especially because the U.S. is the only one, significantly doing what it's doing, right? And it is the global reserve currency, and. So please, stop making yourself look silly by misunderstanding hyperinflation. It is not CPI, right? CPI just talks about the general raise in prices or lowering in prices. Okay? Oscar, what's up, man? Got a question about pivots? Does pivot points matter in the week of dividend and after ex-dividend? They do change rapidly according to dividend point in the week. Yeah, pivot points matter all the time. Remember, pivot points are nothing magical. They're just this, basically they're showing you where the previous period's support and resistance are. That's all pivots really do. So they give you a general idea of where you can pretty much expect to find support or resistance. Now that doesn't guarantee that it'll always, react perfectly to it. Sometimes it drops right through it. Always does that, right? With price, right? It often drops or rallies right through areas of support or resistance. Okay? But pivots, yeah, they always matter, yeah. It's not like, oh, this is some special week that they don't matter all of a sudden. No. But again, they're not guaranteed that price is going to reverse or get rejected at that point. They just give you the expected areas of support or resistance based on previous time frame. Okay? Not previous time frame, but the previous period. Okay? All right, guys. So anyway, let's jump on out here and see what's going on. Bitcoin continues to rally. Period, right? So we were talking about, with Discord, we were looking at potentially coming down toward this area here, unless it broke out above this, in which case, because we were looking at potentially like an A, a B, and a C as a flat, and then 5 coming down. But if it broke out above this swing high, we were going to say, okay, wave 2 is done, and we're heading out. Okay? And so here we are. This is what we're doing. Now, looking at this, there's a lot of overlap here. It's possible this could be like a leading diagonal here. Definitely possible, okay? Right now, we're looking at maybe like a 1-2, 1-2 maybe. And then this could be 1, 2, 3, 4, 5, 1, 2 here, right? But I'm not all that concerned about what's going on here, because when you have situations like that, the best thing to do is zoom out to 1 degree larger. And so that's what we got. Wave circle 3 up here at 22,026. Minimum expected target, right? If we're breaking out above wave B up here, that's 22,490 and a half. We break out through that, that's going to add confidence to this wave parentheses Roman numeral 3 target, which has a minimum expected target up here at 25,640, right? So remember, this whole idea we're looking at here was that secondary idea that we were watching, because at first we were looking at maybe this is a 1, ABC, 2 is a flat, and then 1, 2. This pulled back far enough that it could be, even without breaking down below it, that this is 1, and then this is ABC as A, and then ABC as B, and then 5 down as C. So I think this is probably the more realistic count here, is this 1, 2 as this large flat. So again, breaking out above wave B should signal we're heading up. Big picture, guys, nothing has changed, right? Big picture continues to be this right here. If we get an impulsive breakout above the pivot, we should rally up here. I've been saying 28 to 30, but it's really closer to 29 to 30,000. We should be rallying right up in here. And in doing that, most likely this should be 5 waves, because usually when you're trading pivots like this and you move in sideways between the S1 and the pivot, and then you break out above the pivot, usually it's a 1, 2, and then it's a 3 on the breakout through the pivot there. 5 rallies around the R1 pivot. So you get 1 wave up, 5 waves up, right, is 1 of a larger degree. Wave 2 pulls back to the pivot, and then so that pivot from the low to the high is usually 38.2 to 50%. So you get a wave 1 up, wave 2 back, wave 3 up. Wave 3 again, like here, 1, 2, 3 would break through the resistance here. Same thing here, 1, 2, 3 breaks through the resistance here. Now, I'm not guaranteeing prices can go up. You can't do that, right? Nobody can do that. And if they do, you're a sucker for believing it, okay? Don't be a sucker. Is everybody online willing to take your money and treat you like a pansy, right? Like a patsy, I guess is the word, not pansy, a patsy. Some of them, and I think most of them probably believe they can guarantee you things, but it's just any real lack. They haven't really been in the market very long. You just can't guarantee it. Other ones, however, are going to tell you what you want to hear so that you spend the money with them. We never do that here, right? We tell you what's up, hopefully, because I figure if you're here, you really want to learn something, right? You want to get away from all the fluff and all the nonsense and the bullshit and really learn what's really going on, right? So that's what we do. So, this is that big picture, right? Now, it's possible that we've got the 1, 2, 3, maybe we get a 4 up into this area, and then we get a 5 lower, and again, that'll get us down there toward the 15,000 area, 15 and a half, whatever it happens to be. But that would mean we'd still have to expect it to rally up into this area up here. Right now, with the way this is set, wave 5 comes out here around the top, or the bottom here, the resistance of this large range here. So either case, the expectation, especially if we break out impulsively above this 23.3, 23 and a half level, is that we're going to rally up to around 29, 30,000 in that area. And then from there, we can figure out, okay, is that 5 waves up or is that 3 waves up? If it's 3 waves up, we're going to drop down below, make a new low. If it's 5 waves up, that should be the first real hint that we're done here at the bottom. You get 5 waves up, you get 3 waves back, another 5 waves up, right? 3 waves back, and then 5 waves up, and then that gives us 5 up into this area here. Potentially, right? Or higher, depending on what the expansion is on wave 3 there. So, yeah. But let's talk about the other way. So the other way is, there are no guarantees, right? And so if I'm looking at this, here's what I'm looking at. And my trading view is froze up. No, I want to leave. I don't want to leave. All right, there we go. So basically, we're looking at this as a 1, 2, 3, 4, 5, right? So if we are to break into wave 1 up here, which is right around 21,172, if we break up into that, that should invalidate the idea that this is wave 4 here. Wave 4 should not break up into wave 1, except in leading and ending diagonals. Okay? And this is not a diagonal here. So if we do break up into that, then we should be looking most likely to break out higher above wave B here. And again, look up toward that, quite possibly toward that 29 to 30 level. Okay? If we do come on break down below the swing low here, that's going to suggest that, again, maybe this is wave 4 here, right? And then this is 1, 2, 3, 4, 5. Again, going toward the lower targets here. Right now, right there around 15,100 maybe. 15,400. We'll see if it starts coming back down. We'll see if we can get us a better target on that. So, yeah. Let's see here. Let me see here. Oscar says, okay, so let's say after dividend stock loses the pivot, bounces hard off the S1 in the day of X dividend. That means retest the pivot generally next, right? Yeah, generally, if you lose the pivot, the main pivot, and you drop down to the R1, and you drop down to the S1, the first support pivot there, and you get a rally off that, your first target should be that area right around the pivot. And if you can get impulsive breakout above that, that sets the stage for potentially a move higher there, right? So yeah, so like right here, here's a good example. Look at this, right here, right? So we lose the pivot coming in, right? Hit the S1, rally hard off it, boom, 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 right up. First target's right here. If we continue going up and break out above this swing high right here, which was the previous swing high before the drop down through the pivot area, we go through that, then that should have us rallying up here. So yeah, it should have us, that should most of the time take you toward, rallying up toward the top of the pivots there. So, but these pivots here, it's the end of the week. They'll be done in a couple of days. Then we'll have new pivots based on the, this week's structure. But yeah, again, there's your swing high right before the pivot, drops down through it, catches the S1, rallies up to the pivot to begin with. Now you want to see continuation above this swing high, and if you can do that, usually, you rally all the way up through the pivots. So, yeah. Blaze, what's up, man? Happy Friday, my friend. Good to see you checking in. Mike, what's up? Pivots matter? You're kind of hoping it goes back to your entries within 6 to 12 months? Yeah, I mean, so, yeah, just we'll see here. The good thing about that time frame, Mike, is that you'll pay long-term capital gains on it when you hold it for a year, right? Got to find the silver lining, man. It's what life's all about. That's just life in general, guys. Life in general. You got to find the silver lining in whatever we're doing, right? Well, Zobia, what's up, man? Always good to see you checking in. So that's what we're going to see here. No guarantees about what's happening. If I take all the Elliott Wave out of there, again, right now I'm looking at this. I like the reaction off the S1. I like the rally up to the pivot. Now I want to see it impulsively break out here and then break out above this swing high. If we can do that, I feel good about 29, 30,000 in that area at least. So for me, this is really kind of what I'm looking at right here, getting through this area, right? Because once we do kind of get through this area here, this is all inefficiency right here. See all that lack of volume? So you should teleport right through it up to the other area of volume up there. This should suck you right into it and spit you back out the other side. Okay? Is $2,000 possible? Yerrick wants to know. Man, I really don't know. 200,000. I mean, anything's possible. What's likely though? The logical side of me wants to look at that and go, man, this is what? You're talking about a tenfold increase basically from where we're at right now. And you're talking about in what? This is July, so what? August, September, October, November, December, 4.5 months. The logical side of me wants to say no. But the other side of me says, you know what? Crazier things have happened in the markets, especially crypto. Anything's possible. I don't think it's going to happen that soon. If we hit 200,000, I don't think it's going to happen that soon. I mean, I think if the bottom's in here, I believe we've got at least 150 probably on the books. Much more, potentially much higher than that, but at least 140, 150 area at least. But will that happen by 2023? I wouldn't hold my breath for that. One of the best points of advice I can give you guys as traders is don't worry so much about time. New traders come in the market and they're more concerned about time than anything else. And time's the most difficult thing because as I stayed at the beginning, remember there's that old bit of wisdom there that says markets can stay irrational longer than you can stay solvent, right? You get these periods where you go sideways, it seems like forever. And all of a sudden you have strong moves, right? And you don't know when that's going to happen, right? So yeah, I would try to really get off the whole idea of time and just be more concentrated on levels. When we do it, it'll help you. It'll help you be a lot more consistent in your trading. Because when you're talking about a time component, that's emotion. That's based in emotion. So you want your money yesterday kind of thing, right? So it's all new traders come in. They think they can do it right off, and they think they're going to be millionaires yesterday, right? And it's a time thing. But it's based on the emotion, right? The whole reason you got in as the market was crowning was because you were excited. You couldn't lay off the exuberance anymore, right? You've been holding off, and now, man, everybody's getting rich but me. I need to get in, right? I'm going to be rich like them in the next month. This thing's been firing up, right? And then it doesn't. So time components basically are based in emotion, and emotion is pretty much always going to lose you money. So yeah, I hope that makes sense. Let me see here. 100 times long, stop loss, none. That'd be awesome. Let me see here. Mike says, now if you are truly holding for 2 or more years, like not trading it, you will be fine. Basically cold storage or forget about it. That is investing, not trading. If you got emotion, you're doing it wrong. Yeah, exactly, guys. A lot of times people come in saying that they want to be traders, that they're traders, but they're always thinking about investing. They're thinking about long-term, 4 years out, whatever. That's investing, guys. If you're buying a position now and holding it for a year or even a few months, that's not trading. That's investing, okay? Whether it be shorter term or longer, it's still investing. Trading is this constant in and out of the markets, okay? Yeah. So that's what I'm kind of looking at here, guys. Now, some other interesting charts we have here, right? Excuse me. Let me see here. We have this Bitcoin longs chart here. So this is the rally up here, right? These are the longs. Look at how longs on Phoenix have rallied since January of 21, right? To where they're at. Generally, your rallies and longs, your big rallies and your longs, they come from declines in prices, right? So people are longing as prices falling, right? And so that's what you get there. You get like this right here. See this down, you get this up, and then they unwind. So again, you got this coming down, you got it coming up, and then they unwind as price rallies, right? That's usually what happens. So your longs build up as it's dropping, and then they kind of release as it rallies there, and they get out of positions, lock in profit along the way, stuff like that. So, but it is interesting to see it, looking at it right here. And so if historically, is any clue as far as what's going on there, again, you have this rally up here as it unwinds. You had this increase in longs as it got down to the bottom here. And so if history is any teacher, it's possible, that we could be near a bottom, right? As we drop on over here, potentially. So we'll see, right? The other thing we look at, Bear USDT, Bear USD. No, it is USDT, yeah. This is on FTX. It's a 3-time short play, right? And I talked about the idea that it looks like we've got an ABC here. Looks like we've got maybe a leading diagonal going here, right? And so, again, would expect this coming down here, which means we should see price continue to rise. Let's throw Let's throw Bitcoin on there. We'll use FTXs since that's what they got there, right? Let's see here. Logarithmic, there we go. Oh, what just happened there? What did I screw up? Oh, this is the wrong one. This is something else. All right, let's try this one here. There we go. All right, so, as you can see, inversely correlated, right? So as price rallied up, this was November 21st, the November of 2021. So we rallied up. You see that we dropped here. Kind of doing some sideways. But really, it's sideways, but it's really, as we've talked about, it's a high, low, a higher high, potential higher or low, but we have to get a higher high there to confirm that. And in this case, low, high, lower low, potentially a lower high, have to get a lower low to confirm that. So again, could look for this drop down, have us teleport up here, finish it up, and then pull back as shorts build up again. We'll have price breakdown and come up. So Bear USD chart is looking kind of interesting. Looks a little bit easier here to count potentially than what we've got here with the more of the sideways, the flat kind of correction going on. So yeah, just one more thing to look at, right? Let me see here. Andrew, what's up, man? How about the current weekly candle? Hammer time? Andrew loves those weeklies, man. By the way, this isn't weekly here. Just want to kind of get this set back here. So we do this. Let me see here. Again, on the weekly here, the Stochh RSI is really, really topped out. It's remained almost topped out here on this bear USDT. Quite a while there. But there's really just not a whole lot of history with it either. So you got to keep that in mind. 3-day looks a little bit like that. We've got further to fall here to get into oversold. You see that the volume's picking up here as we're rallying, as we're dropping down there. So, again, looks like this count may likely be correct. We'll see how it continues to play out there. But definitely one of the things that I'm watching that isn't actually Bitcoin itself as we look at that. Let's see here. Bitcoin. Let me go back to the Bitcoin chart. You said weekly. Hammer time. Oh, you looking at this right here? Yeah, quite potentially. The thing is, though, it's really just sideways, right? So, really going into 1, 2, 3, the fourth week, we're really just sideways overall, right? So, I don't know that I give it a whole lot of hammer time thought, right? But, it's definitely not saying it has to go down. That's for sure. So, yeah. But as far as the weekly goes, what I do like about the weekly, again, is we are still oversold here. Haven't even broken out of oversold yet in the RSI. Stochh RSI hasn't broken out yet either. So, a lot of potential room to the upside for them to do so, right? So we'll see this. Again, bigger picture, we talked about the daily, even bigger picture. If we can break out, the same thing we were looking at here, right? If we can break out impulsively above the weekly and carry out above the all-time high here, which was the previous high, right there around the R1 before it dropped down below the weekly there. If we can break out there above that, there's very little reason why we shouldn't rally up through the R5. And again, that kind of gives us that 150,000 area minimum there. But if this is still 4 and that's 5 coming up, then generally there's no reason not to expect, even though past performance doesn't indicate what's going to happen in the future, historically, Bitcoin always does this at the end of the bull run, right? Now, the other thing I was talking to you guys about, remember, the other thing I was talking about was what if this is 1, 2, 3, 4, 5? So this is 1, 2. For those of you guys out there looking for Bitcoin to rally up to 500,000 or something, there you go. If this is 1, 2, I think what the next halving's what, 2024? I think there's a lot of potential to be said for this. So I'm not looking at that as well. I'm not ignoring that. But we always talk about what's first, right? What you don't want to get ahead of yourself. And so right now we're looking for this potential being 1, 2, 3, 4, and 5 up here. But again, it breaking down into the previous all-time high there, which it has never done before, again, as I've talked about, suggests that maybe that's a 1 and a 2, and we've got 3 coming up. Wouldn't that just blow your socks off? There's some other things I wanted to say, but this is a show that I shouldn't be saying those types of things. As funny as they are. So yeah, guys. It's the same thing I've mentioned before. Probably about a month or two back, 3 months back, even when we were looking at potentially low here or coming down a little bit lower, saying what if. Because we dropped down below here, what if this is 1, 2, 3, 4, 5, and this is 1, 2, 3, 4, 5? There'll be a lot. If that's the case, there'll be a lot of people kicking themselves for not buying down here. You guys know where I'm in, right? I'm gonna go buy an island if that works out. If it is 3 coming up, that'd be pretty great. Again, I am not telling you guys, and it's sad that I've got to say this, but so many people, look at what I write or hear what I say, and they say, "Oh my gosh, you said it was going to do this." No, I didn't say that. I say it's a possibility. Maybe it's something coming up there, right? But anyway, it's good to keep in mind, guys. It's good to keep in mind. It's and by the way, that isn't hopium or anything like that. That look at what's going on here, guys. Look at your monthly. Look at your monthly way down here, right? Last time it was down, it was low. It wasn't quite that. It was actually a little bit low, a little bit higher here. Was right there, November 18th, the low, right? The bear market low, and we've gone up 5 waves since then, right? The big 5 waves from 3,100 to 69,000, right? What was that, about 23 times? Something like that, right? Because 10 times would be 31, 20 times would be 62. So maybe 23 times. And wave 3 would be bigger than wave 1. So yeah, could be interesting, right? Tell me you guys aren't interested in that. But we'll see, guys. We'll see what happens with it, right? But it is something important to keep in mind. But these pullbacks, man, we are bottomed out and oversold here. We're dipped down a little bit lower than we did previously here. This is, of course, Coinbase weekly. Again, weekly hasn't been oversold. I think it dipped into oversold. Yeah, it dipped into oversold back here again at that same bear market low there. But it dipped down even further here. So again, what if, right? And by the way, if Bitcoin's rallying up like that, unless your shitcoin is just really shit. God, I hope there aren't kids listening. Anyway, they probably be bored anyway. But unless it is, again, a rising tide lifts all ships. And we should expect that that alts would do better, would perform better than Bitcoin. Alts, including Ethereum, stuff like that, right? So yeah, it's quite interesting, guys. But remember, bottoms take a little time, right? So it's gonna take a little bit. So we get this little bit sideways here. We break up to here. We come on back, and then we break out, right? So maybe we've got this ascending accumulation range here up into the S1 pivot there, a little bit above that, right? The weekly there. So instead of like this, we accumulated sideways here. Maybe we kind of keep this. Now, there's nothing saying that we can't turn out like this, guys. There's nothing saying that this right here is not this right here. And of course, we rally up there. But again, that would say that, hey, we'd kind of take our time. It's a lot shorter time frame here, right? We'd be rallying right back up to the same resistance, and then rallying pretty strongly back up through this. But wait a minute. Didn't I say that? Think about it, guys. Again, same idea here, right? Rallying up to the resistance and then popping off where you get the inefficiency, popping right up through that inefficiency, right? Same idea here, popping right up through that inefficiency. The other thing, of course, we've talked about is the idea that we had this flat correction over here, right? 1, A, B, C, 2, and then strong rally up. 1, A, B, C is 2. Potential strong rally up. As far as the 3-day goes, that's a better almost hammer candle there than on the weekly. Because you got, again, a high, a low, a higher high, and potentially a higher low at the end of this 3 days back, printing this large lower wick, the body closing up near the top of it there, potentially getting ready to break out. Right now, sideways as we kind of hit through this area where all this supply is, but it's continuing to try to push through. So again, breaking through that area, through this whole area, he should have us rallying right up there. So I do this, guys, not to say, okay, this is what's going to happen here. Back there, what happened here is what has to happen here. Because I'm not a big believer in analogs, which a lot of technical traders are, because I study Wyckoff, right? And so there are different ways in which ranges form, but the idea is that a range forms. That's the idea. And it's done in different ways, which may often are nowhere exactly the same, but they're similar. They're similar, which is where you get that whole idea of analogs. But the people who are talking about analogs, they're not understanding what's going on there. They're just saying, oh, look, it's kind of printing the same thing. I don't know, guys. As traders, you've got choice. You can either, you got, I guess, 3 choices, right? You can ignore, period. You can say, okay, I recognize that kind of thing may be forming here, and then you can choose what to do with it. Or 3, you can actually try to understand what's actually going on here and why that's creating that structure. Again, guys, for me, I decided I needed to learn what was going on and why. It wasn't good enough for me to just understand that things were happening, because I was still losing money, right? I wanted to understand, why are these things happening? What's going on? And that led me all into the whole psychology side of it, which again was crazy, because after 20 years of doing it, I found out, oh my gosh, there's this thing called socioeconomic theory, which is the exact same thing I figured out on my own, but it's taken me, 15 years or whatever to figure it out at that time. So, yeah. Crazy thing, right? Chris, what's up, man? He says, how is this speculative internet money going to pump to 100K this year when record inflation, gas, rent, food, etc., people can't afford to live, yet alone buy the Ponzi? Well, first of all, you're already clearly negatively viewing this. So of course, I don't mean this disrespectfully, but I almost feel like there's nothing I could say that's going to do anything to change, to even get you to think about anything else. Because you're so solidly negative on it already. Ponzi, internet money, but, so people, if the rest of the market is coming down, right, people are going to look for some place to put their money. Just because the economy rolls off a cliff or whatever, doesn't mean everybody all of a sudden doesn't have money, right? People still have money. And they want to look for somewhere that they can, where they can put their money, where they can get some kind of return, especially if everything else is going to crap, right? So what's going to happen with Bitcoin? We don't know for sure, right? We don't know. Bitcoin was born right after the 2008 financial crisis, right? It's only known a secular bull market. So we don't know what's going to happen with it. Normally, just as a trader's been around for a very long time, I would say, okay, well, generally I would expect it, as I've said previously, that it's probably risk on, which means if the market goes risk off, nobody's going to be interested, like you're saying, nobody's really going to be interested in putting into it, right? But there are some other little features to it that kind of always have had me kind of on the sidelines about it. So yeah, my initial thought is, okay, it's risk on and what's going to happen, how could it happen? But here's the thing. If you get some money into it and it starts moving, people will start getting interested, especially if they have lack of places elsewhere to really put their money to grow it, right? So yeah, I mean, there is that possibility, right? But again, there's always money, guys. There's always money around there. It's just, where does that money go? I think that's the bigger idea there, right? Does that make sense, Chris? So there's always money floating around. There's always money that has to be invested. There's always money that has to go somewhere. You know, you've got financial advisors and funds and you know, private equity, and so money's got to go somewhere. So money's always going somewhere. But I think a lot of times amateur, new traders, they view the market in terms of their own thoughts and whatnot's going on there. They can't fathom what happens with $100 billion or $100 million or $1 billion funds and stuff like that, or tens of millions of dollars even being held that needs to go somewhere. Yeah. So hopefully that makes sense. Also, when you talk about record inflation, sure, inflation's high right now, but your assumption based on what you're saying there seems to be that it will continue to rise. I don't believe that. I think, we're probably at near the top. I thought it was maybe the top, the previous, before it rallied. Okay, so it's not. That's fine. But when we continue to look at things, we know that what are the biggest contributors to CPI? We know it's fuel, energy, right? And it's housing and it's food, right? We know that the housing market's cooling off. We know that. I said here, and again, I mean, just me personally, looking at homes in the Houston area, right? Lake Conroe, Lake Houston, Magnolia, Woodlands, Spring, all that kind of area, right? North Houston there. What I'm seeing are houses that went on the market a month ago and have dropped 10% in a month or less than a month already. They're already dropping prices without even being on a month. We know that houses are sitting on the market longer. We know that that the larger mortgages have slowed down, and mortgages in general have slowed down. We know that viewings have slowed down on houses. We know all this information is out there. It's public knowledge, right? You can go through like Redfin. Redfin has its own economists, and they publish whatever it is, bi-weekly or monthly or whatever theirs is, and other ways in looking at it, right? So we know that, right? We know that lumber's dropped off. We know that gold's dropped off. We know that silver's dropped off. We know that, so all these things that were rallying have pulled back, right? We know copper's pulled back. And so, and energy, we know that energy might potentially be topped out as well. So the idea that inflation is going to continue to run rampant doesn't make a whole lot of sense if those main contributors are pulling back. Okay? So, yeah. So anyway, just kind of looking at that and it doesn't seem to suggest that inflation is going to rally much stronger, right? So as I told you guys a few months back, I was looking at the Fed probably easing back end of Q3, beginning of Q4. So, maybe that September, October area. So that's coming up. We'll see if they pull back. Right now, the market's, I think it's like a 75%. They're betting on a 75% chance that the Fed's going to raise raise interest rates a full 1 point, 100 basis points there in August. And they may. But, again. So how do we look at markets, guys? Okay? How do we look at markets? When stock markets rally, when they get toward the end, when they get to their fifth wave, the feeling in the market, every wave has a certain psychology to it, right? So the feeling in the market as a fifth wave is that it can't ever possibly end. It seems like there's good news everywhere, right? Everybody's ignoring the other technical indicators. They're saying there may be something going on wrong in the economy. Everybody's just like, oh, we got to keep buying, right? So again, if you think about Bitcoin right here, laser eyes, right? And then even the final rally up here. Everybody continues to think it's going up, right? Commodities are different. Commodities, as they rally in their fifth wave, are often because of fear, right? So that's why you get the sharp rallies in the fifth wave. Your fifth waves are often in commodities overextended because it's fear. Famine, war, stuff like that. It's fear-driven. So what happens is you get these strong rallies up in that fifth wave, and everybody's like, oh my gosh, it's never going to stop, right? It's going to keep going up. Do you guys like that? It was, oh my gosh. Anyway. Oh, man, I hope you guys are watching this and not just listening, because That was awesome. But anyway, so people freak out, and then it gets up there, and they're like, oh my gosh, it's never going to stop, right? We're scared. It's going to keep going up forever. And then that's when it turns. So, these are things you probably don't know, maybe things you don't understand. If you haven't been trading markets for, 10, 20, 30 years, anything like that. But that's generally the way in which it works. And so we had the strong run-ups in lumber and copper. We had those big run-ups, right? Most likely fifth waves. And so that means now we're pulling back. Which means if all that's pulling back, well then inflation should come back down, right? Inflation, CPI, right? Let's see here. Yeah, and it's always lagging. So Andrew says oil, gold, silver, etc. dropping now. The charts were showing inflation coming in 2020 and 21. Yeah, and so the market is usually off a bit from what's actually going on with the economy, right? So the economy shows the signs and everything, the indicators, the things I've talked about over the last few years that we were coming to a top, right? And then the market follows, a little bit later with that. So, but you get that warning from those indicators. Indicators never say, oh, it's going to stop right here. It's warning you that, hey, things are changing. And so if you've got this rally up and things are changing, guess what? That means coming back down, right? So we're coming there. Now, I'm sure I've probably got people listening in here who don't get it. And they're probably laughing and thinking, oh, whatever, man. You don't want to talk about it. It is what it is, guys. Do what you need to do. But, there's a reason I've been doing this for as long as I have, and I'm still doing it today. Okay? In life, guys, if you're ever that person, that one who doesn't really have any knowledge, who doesn't have a real education or experience in a certain subject matter, and you pop off like you're God's gift to everybody, God, if that's you, please don't ever do that. I hope this is a wake-up call that says, listen, not just in trading, but in life, don't be that person. Why, when you can choose to be a decent person or a jerk, why would you choose to be a jerk? It takes more energy to be a jerk. Why not do what you can to, to show some light in this world? I mean, seriously. Man. Blows my mind. Anyway. Let me see here. Talking about rounds there. 5 by 56 millimeter, huh? The volume profile indicator shows where we're going straight down to 12 or 14K. Which volume profile are you talking about? You talking about this one over here? Why do we have to go down here? We're right here. You're assuming this can't hold. Right here. There's nothing telling me that can't hold right there. If it does drop down, then yes, this whole area becomes a big catch, sure. But that doesn't mean this can't hold right here. Look how long this one held over here. Over a year. So, yes, it can go lower, and we've talked about lower potential targets. But for right now, until we start breaking down through those invalidation levels, there's no reason not to continue looking up, right? Let's see here. Oscar's talking about 3 Arrows, Luna, Celsius, Voyager, leveraged Ponzi scams which blew up in plain sight. Be careful about calling for 6 figures. I'm not calling for 6 figures. God, see, this is what I mean. Oscar, you should know better, man. You've been following me for how long? I didn't call for 6 figures. I said there's a possibility for that, but we have to, as I've mentioned, have to go through these other things first, right? I've said from day one, this could be wave 5 here, and we could be making a much further drop back. But we play it, but I'm a trader. I play it as it plays out. Short and long along the way. Keeping the eye on the bigger chart to know where those more significant levels are. Okay? Make sure you guys understand, I'm not calling for anything. I'm explaining the chart and what I'm looking at and why and what it could potentially lead to. This is what I'm doing. There's a big difference in that, guys. Okay? But all that happened because they were leveraged out up here at the top, right? Cleansed out, right? Potentially cleansed out. Remember, we looked over here at the, let's see here. At this capitulation band here, right? And the idea that we had this huge bit of red here, which we've never seen previously. It's never been anywhere near as big like that. And that was all right here. The idea that likely what happened was retail, for the most part, was out here. A little bit newer coming in here. But then as it broke down through here, the new stuff that came in and those that didn't panic here and sell, started panicking selling here. But most of this appears to be driven by the liquidity issue with Voyager, the leverage issue with Voyager, Three Arrows Capital, all that kind of stuff. So that's a cleansing right there of that. So, I mean, again, there's quite a bit of narrative that could say, you know, maybe that's that right there. Again, we have a little bit of capitulation here. If we go back to the weekly here, we have bullish divergence on the weekly MACD histogram here. And the last 2 weeks now, last week and this week, we're less and less. We're driving up toward the center, the zero line here. As you can see here, we're curling back up, narrowing bands. So again, it doesn't mean that it has to go up, but it means potentially. As I said last time, this is the 200. Is this the MA, I think, here? Let me see. Yeah. It's the 200 MA on the weekly here. So like I said, getting above this should send us back up, right? This right here is around that 23 area, 22.5, 23. What is that? It's this area right here where the pivot is. And like I said, through here, we should rally right up through the inefficiency here to the R1. That'll carry us above that 200, right? And what did I say? I said usually we'll get 5 waves up to the R1 area, 3 waves back to the pivot, and then break out for 3, right? Well, what does that mean here? It means break out above the 200 weekly MA, rally up, basically to this descending channel EQ here, pull back and retest the 200 weekly, potentially support, and then break out and head higher. So, I mean, yeah, I mean, there's a lot on there that says that could be what's going on there, right? So, yeah. Let me see here. Genghis Khan, what's up? Yeah, don't be that guy. Oh, Oscar. Okay, I see. You weren't talking about me. Okay. I try to keep up with you guys, but sometimes, you know, I get into a little bit of a talking thing there, and I don't get that there, right? But, you know, again, so nothing I'm saying guarantees that price is going to do a thing. I would never do that. I've never done that in the 5 years almost that I've been doing this live with you guys. It's always been about, listen, here's what it looks like is going on in the market. Here are the ideas. Here's what it could mean. Here are the levels we need to start working through because, again, I'm a trader, right? I trade. And if you don't make it through those levels, those validation or invalidation levels, then the ideas are, you know, validated or invalidated. You work with it, guys. That's how you trade. So that's what we're kind of looking there, right? So anyway, so that's that. Let's jump over here to the DXY, right? Because that, man, everybody and their grandmother called me names in January 5th of 2021, when I said it looked like the bottom was probably in there. And I gave you the reasons why, right? We were looking at how offsides DXY shorts were, almost at 94%. And historically, when that happens, it's usually a point of reversal. We talked about the fact that that currencies generally tend to reverse, you know, their major trends in January of the year. You know, and we talked about a few other things, right? And they continue to call me names up through about I guess probably about 98 or so. And then people finally shut up. Nobody ever came back and apologized. That's what's funny. Thankfully, I don't need their apologies. Just drinking their tears. It's all good, right? Seriously, guys. So we've got this. And so we've rallied up to this wave 3 target here. I've kind of adjusted the count a bit. Maybe we've got wave circle 3 up here. So the first thing we need to see is a breakdown through 107.477. That'll hint that maybe we're hitting, that we reversed. Beyond that, we want to see this continue on down here toward the daily pivot at least. And that's right around 104 or so. So that's what I'm kind of looking about now. Ultimately, again, expecting at least to get up here around this 115 area, which is the EQ of this large supply structure, and potentially even higher. But at least up through there. So now, right now, we're looking for this breakdown here to come on down, right? Says we're up. Okay, Chris, I get you, man. Yeah, again, like I said, just choice of words. The best I can do, man. Right? Because it's comments, right? But again, nothing I said ever, wasn't, of course, was not meant to be. Nothing I said was meant to be disrespectful or anything. Just trying to, hopefully have this understanding of what may be happening with it there and why, Again, guys, the big story, the same thing I've talked about for years now is that we don't know how Bitcoin will, or cryptos will act in a recession or, God forbid, a depression, right? Because it's never had one before. Its entire life has been in this secular bull market since the last one, right? So we always keep these bigger ideas in mind and reasons why things may or may not happen. But as traders, we keep that in mind, and we keep the idea of how price could be reacting in those very large time frames. But we're traders, so we trade the shorter time frames, and we look for validation and invalidations as price advances or declines. And I mean, I think a lot of traders, it seems like, unfortunately, what they do is they get in on those smaller time frames with that big macro idea. And so they refuse to pay attention to what's actually happening locally, right? Yeah. I'm really curious how it's going to do too. Yeah, I still believe it's a speculative asset. I do. Like I said, the logical side of me says, Bitcoin goes down in a recession or a depression because it's risk on, right? It's speculative. But that other side of me says, there are these other things going on with it. It's not your normal speculative asset, potentially. And so that gives me, a bit of caution for what I would normally think. And so we just want to see how does this play out? How does this go on? Okay, how about this? If it's wave 5 and we're going up to 150,000 or something, right? It is possible, because of the newness of Bitcoin and it's just becoming mainstream and all these other narratives and everything, that even while everything else is starting to come down, Bitcoin could have its one final hurrah and be the last thing to come down. That's possible, right? So it doesn't necessarily have to mean that it just continues up forever. I mean, that could be it, and then Bitcoin's down to $1,000, right? Over the next 3 to 5 years or whatever it is after that, right? So that's definitely possible as well. Yeah. It doesn't have to turn down at the same time, right? So let's look at, where is my Discord here? All right. So let's get our charts here. Let's look over here at gold, right? So we're talking about maybe Bitcoin rallies up higher, and the rest of everything else is kind of already pulling back. Bitcoin's the last one, right? And that could be a product of its speculative nature, and it's just getting out there and people want to believe and all this stuff, right? So it could cause this to rally one more time before it just come crashing down, right? So again, NASDAQ topped out there in November of last year. January of this year, we had the S&P and what's it called? The Dow topping out in January, right? So what if, let's look at something here with gold, okay? Let me pull this chart over here for you guys. All right. So I say that, right? And you're like, no, I can't really. But look at this. So gold topped out in August of 20. So then it was November of 21 that NASDAQ topped out. And then January of 22 where the Dow and the S&P topped out, right? Now gold rallied back up here but fell short. Double top. It looks like we're about to break down below the swing low here. If we do, this should be a double top. Has a target, to Do I have that target on here? I don't have it on here. Let's see here. Oh, this is an old count on here. Oh my gosh. Don't worry about the count here, guys. But that gives us a target down here around 1350, as I've told you about, right? Which is right here at this high volume node, right? But usually pattern targets are wave threes. Get it lower. Remember, my idea right now is that this is the top here, right? And then this is ABC and this is ABC. And so we've got this flat printing, which should see it dropping below, down here toward this 900 level. But again, the other idea is if this is a flat, this could be a running flat. And in that case, it would only be expected to pull back to this 1400 level and then rally back up. So locally, looking for at least this high volume node here, potentially for that breakdown to 900 or so. But yeah, so gold would have topped out over a year prior to the NASDAQ, right? So yeah. So again, things aren't going to all top out at the same time. So that does leave room for the idea that maybe, right, Bitcoin could have one final hurrah, finish its fifth wave, right? Because it can move quick, right? I mean, let's face it here, guys. This is November of 17, and it went from basically the swing low here right around, what was that? Right there at 55.11 up here to, whatever it was, 19,891 kind of area, right? 891. So it rallied up almost 4 times in basically what amounts to just over a month, about 5 weeks. So, again, you could see a strong rally up here that finishes off. And then that's it, guys. And then that's 5 waves up. And at that point, we do this big pull down here, at least to 3,000, maybe down here toward the previous 2013 swing high there at around 1,100 or so, 1,200, maybe even lower. Who knows? But I mean, so yeah, it doesn't mean that this. We floated the idea that maybe what if this is 5 up and this is 1 and this is 2 and we've got 3, 4, 5 still to go, but that's all secondary, right? That's all secondary. That's not that shouldn't be your initial thought. Your initial thought should be that if we break out above here, that this is 1, 2, 3, 4, and we've got a 5th wave to go. So yeah, definitely something possible on there, right? What's going on, Hank? Tell you Rider, good to see you guys joining in. Wouldn't it make more sense to do that dip now when we are entering a recession? What dip? What dip? It's dipped. It's dipped already, right? 70,000 to 17,000. It's dipped, right? You have to let me know what exactly you're talking about, what dip you're talking about. If you're even talking to me, you might be talking to somebody else. Oh, to 3K? Why would it make sense to do it now? If there's a recession or depression coming in, it's just starting. Why would it make sense to drop all the way to 3 here? It would, and especially if it's going to be a depression, to me, it would make more sense that we finish a 5th wave as a final hurrah, a final throw, that's it, and then it comes crashing down and kind of signals that's the end of speculation. That's the end of it. Remember, we're talking about this current high being the everything bubble, the credit bubble, the top of the top. Everything needs to unwind for the last 200 years. That's what we're talking about, right? So to me, it would make more sense for Bitcoin to rally strong, finish off that 5th wave, and that marks, that's it. That's the finale of it. Nobody has any more hope left. Everything else is already dropping. Now Bitcoin's going to. That would make more sense to me. I mean, and again, that's just how I would think about it. Doesn't mean it can't go down there, of course. And, we'll watch as it does and, we'll adjust the counts as needed. But it definitely seems like it should be like a final hurrah up that finishes off and then just kind of marks the end of the end, right? So, yeah. Assets aren't going down because USD is going up. They're not going down because it's going up. Those are two separate things, right? So the value of the USD may contribute to some decline in asset prices, but it's the other things going on that are real drivers of why the asset's coming down. Yeah. So we got to be careful when we look at that, right? Merrick, what's up, man? Yeah, so there's always the idea of a possible, expanding triangle. I floated that idea, right? So maybe, again, A, B, C, we'll get a D as a higher up, and then we'll get an E as a lower down, right? So there's that megaphone pattern, inverted symmetrical triangle. A, B, C, D, E, and then wave 5. Sure, still a possibility. But again, that's got a lot more to play out, so that's sitting behind. That's one of those things that if it goes up here and it doesn't continue up, then we'll look at that potentially. Yeah. Let me see here. Andrew says, great reset, not till 2030, so we're good for a few more years. Possible, right? Yeah, but we don't know. Again, guys, I want you, especially if you're newer to trading, guys, and nobody's told you this, please understand, myself and everybody else, nobody has a crystal ball. I don't care what they tell you. Nobody has a crystal ball, which is why I continue to tell you, be wary of those that guarantee you that price is going to do a thing, whatever it is. That's silliness. Nobody has a crystal ball. Nobody knows for sure. Nobody can guarantee you. They may get lucky and get it right on occasion, and heaven forbid, you just stumble onto them and they get something right, and you go, oh my God, they can tell me what's going to happen. Because what's going to happen is you're going to lose all your money. Okay? You absolutely have to learn how to trade, guys. You have to understand markets and what's going on. And then you have to understand how to do proper risk management and then do it. It's not enough just to know. You got to do it consistently. Okay? So, yeah. So we'll see there, right? What's going on there. We'll see how it still goes. Again, right now, the ideal big picture here, guys, right now we're looking to get above that daily pivot. Should teleport us up to 29.30. My expectation would be a pullback down toward the pivot at that point. And then we'll look for a breakout higher. If we do, that says to me, that's 1, 2, 3. We'll get a 4. We'll get a 5. Yeah. And so to me, that looks like a lot of possibility, a lot more possibility that we may be making that new all-time high. But until we actually do, we can still turn around and fall back, guys. Okay? Till we actually make an all-time high, we're still prone to get pushed further down, okay? God, I hope that rings with you guys, resonates with you. Let me see here. So if we look at this, we looked at gold, same idea there. Oil, again, we talk about, CPI and inflation and whatever. Oil is one of the biggest drivers of the CPI number, right? So let's kind of pull back here. Pull this chart up for you guys. Oh, man. Stupid browser froze up. Let me see if we can get this back over here. Oh, there we go. All right. So we had the all-time high, WTI, right? September 11th, 2008, right there, 147.27. Right now, we're coming down, right? So we've come down to the R1 pivot on the weekly here, finding some support at the moment, but you can see that we've still got a lot lower that we could fall here on RSI, right? So again, I'm still looking at this as being done from the rally down here at that negative 42 or whatever that was back in May of 2020. I think that's 5 waves up there. So looking for this pullback down here, at least to this 50 kind of area. Potentially much more likely down here, I think, toward, 30, 35. We know that demand for oil is dropping off now. We've got the latest numbers. Demand's dropping off. And so, we talked about mortgage rates earlier, and I've talked about this before. Here's the Fed saying, oh, we're probably, problem raising it 75 basis points. Markets, betting on 75% chance of 100 basis points, right? But what did the mortgage guys do? they dropped them. They dropped the interest rates, right? A few weeks back, right? And they dropped it like 0.5% when the Fed was already talking about raising it 0.75 of a point, right? 750 basis points. And so again, that's because the mortgage guys are telling you, listen, we think there's a recession coming in at least. And that's what they're telling you. Oil, same thing. Like I said, demand for oil has been dropping, and this is what this is what I've talked to you guys about. If the market's topping out and whatnot, and oil should be expected to pull back. There's going to be if the market's coming down, that tells you there's something going on with the economy that's not good. And so we know that a lot of companies are laying off people, right, and rescinding job offers for those that haven't joined, right? So people are getting worried. Interest rates are up. People are losing their jobs. Prices of things are getting higher. All of a sudden, they're not driving everywhere. They're not flying everywhere. They're not taking all the trips they were previously. Those are starting to drop off. So less demand. So not just the transportation cost, again, of oil, but oil is pretty much in everything we do, right? So plastics are a huge thing that have to do with oil, right? And so if we're not buying as much, there's not as much demand for plastics, which means not as much demand for oil, right? So yeah. So we'll see, right? Let me see here. So yeah. So we've got all this stuff going on here, guys. And, I continue to talk about this every show, all the new developments and everything. Nothing is going the other way. Everything is continuing to get worse. And so, as things get worse, there's less demand for these things, right? We know that copper's fallen off significantly. Dr. Copper, right, tells you what the economy's doing. Again, if the economy's doing poorly, there's less demand for oil, period. And so if there's less demand for oil, the CPI should start pulling back. Because in addition, we've got house prices dropping. We've got less people interested in buying. We've got mortgage applications down significantly, right? Now, they still say that there's a lack of supply in the housing market. So what does that mean? That means if you've got a lack of supply and you've got a dropping interest in mortgages, people filling out mortgages, probably looking at renting, right? So where do you maybe want to be if you're investing? Maybe look at rentals or companies that work with rentals, right? That might still be the way to go if you're looking for something in the legacy market there, right? 83 Madden, what's up, man? Mike, have a great day, bub. You provide escort services for 90-year-old ladies? Hey, just be nice. Always be nice. So yeah, it's again, it's this whole thing, not everything happens at once, guys, right? So we watch the big things. We watch oil. We watch housing. These are, we watch copper. These are three big things that really kind of tell you what may be going on with the economy. Again, with copper, it's the idea that so many things use copper. So if copper prices are falling, there's a lack of demand, which means there's a lack of production, a decreasing production, right? When the economy's doing well, production continues to increase, right? Traveling increase, all this stuff. It happens the opposite when the economy's not doing well. Let me see here. Let's jump here at the NASDAQ here real quick, the composite. I'm just about out of here, guys. Let's see. Oh, whoops. Get in there. There we go. All right. So, again, this was the high here, November of 21, right? Up there around 16,212. We've dipped so far as low as 10,565, right? So 16 to 10 is almost 30%, right? 25%. Officially a bear market, right? You got to drop 20%. Now I've got the idea here that maybe we've got a 1, 2, 1, 2, and then a 1, 2 here. The other possibility is maybe this is a 1, 2, 3, 4, 5 as a leading diagonal. And so we'll have a wave 2. So if we're breaking out through here and then this level, we're looking at this potential as a leading diagonal here, rallying back up toward, at least the S1 here on the weekly, maybe even the pivot, and then head down. Now, why might I be saying that? Because generally what happens is wave 1s, everybody still thinks it's possible that they're going to be okay, that the market's still going to go up. And so they say, oh, it's just this false thing here, right? And then it starts rallying. They're like, look, see, I was right. It's gonna go to a new high. And so then the mood stays there. But then all those indicators, all those bad indicators we've been seeing here, start to come out even more so, right? And then the news gets bad, whatever, and then it starts prawning back here. And it's on the drop below wave 1 that all of a sudden they're like, oh God, I'm in the wrong way. And then everybody jumps in for that wave 3 down, right? But again, until we're breaking out there, right now it looks like 1, 2, 1, 2, and then of 3 here of 1, 2, 1, 2, we got 1, 2. 1, 2. We'll have a 3 coming down if we break down below the swing low. It's the same thing across the other indexes. Same thing in the Dow and in the S&P as well. So either leading diagonal coming down, or it's a 1, 2, 1, 2, and then 1, 2, 3 heading down on a breakdown. Hey, Mr. Wilkes, what's up, man? So yeah. Potentially one more up there, Oscar. I'm sorry, 83 Madden. You can rewind earlier in the show. I talk about it. The possibility that we got a 5th wave, or maybe this is 3 of 5 heading up. So, but not calling anything. Obviously, just saying, these are the possibilities. Then we need to work through our levels to get there, for sure. So that's it. Other than that, guys, we've got the euro broke parity with the dollar. Again, those of you that have been with me a while, when I called the dollar bottom, when I was talking about that dollar bottom there being likely in, I mentioned that we'd likely see the euro break parity with the dollar, which means drop below 1, right? And so here's that big picture here of the euro USD and the monthly. As you can see, we've so far dipped down to 0.99521. And so again, the euro is about 58% of the weighted value of the DXY. So it has the most effect on it, right? The yen is like about 13%. It's the second largest. And we know how the yen's been doing, right? 50-year lows against the dollar, right? So as long as these two continue to do it, and of course everything else still going down as well. Cable, Canadian dollar, loonie, the Aussie, all the things still going down as well, right? So there we are. You can notice right here that on the monthly, we've just kind of hit this area here. Makes a lot of sense, right? If I look at this looks like an ABC here. This looks like it could be building 5 down as it works there. So we'll see what happens as it continues on. But, we got what I was looking for. So what was that? January 5th or so of 2021. So we're about a year and a half into that. That's what I was looking for. The monthly, though, hey, here's the thing. The monthly is dipped down into oversold right now on the RSI. Stoke RSI is oversold. So most likely, this big move down should be done or nearly so, right? On this chart here since 94, right? We've had a couple of breakdowns below the, into oversold here on the RSI. Back here in 97, and then again here in 2000 and later in 2000. And then over here in March of 15. And then here we are again. But just because we're in there doesn't mean we can't drop further. Again, we did have, twice here, right? Leading into this drop right here. This is really interesting right here. Look at all this volume spike coming in right here. Rallied back up, but was rejected the previous high. Sent back down. Remember what I told you guys. It's not just volume and price action, it's follow through. So you get right here and you go, okay, maybe this might be signaling a bottom here and we might break out higher. But if you can't break out above this previous area of resistance, there's no, and instead it dropped down below it, right? You can see right here that we had that month of up right there, right around that area, right around here. But now we've broken down below that support. Euro just doesn't look good, guys. So yeah. Anyway, so that's it. Let me see here. I think it's probably all I really have to say here, guys. Again, nothing happening right now that I haven't talked about for the last few years. Everything kind of happening the way we expect. Now we just need to see, does the Fed start pulling back? Beginning of Q4 there, so maybe September, maybe October, right around there. What would make the Fed pull back? If CPI showed a drop off, that would do it. If oil and if housing continues to drop off pretty good and oil drops off pretty good, then yeah, I mean, at that point, we could probably see the Fed, do a strict about face over the course of maybe 2 or 3 months. But it would be a stop from maybe a 75 basis point or 100 basis point rate hike to maybe like a 25 point base, rate hike, or even just run flat, not do anything. That CPI is the big thing right now. And again, everything seems to have topped out. All your commodities had all those big moves up, right? So we're looking for that to see if we can get some follow through to the downside now with that. Okay. Okay, guys, listen, I'm over here. I got to get out of here. So yeah, as always, remember the only thing you control in the market is how much you lose. So please keep work on your risk management, guys. Stop paying attention to people who don't know the difference between CPI and hyperinflation. Please stop listening to people who guarantee you that things are that A, B, or C is gonna happen. Again, just because there's a good possibility something may happen does not mean it has to happen. And that's one of the biggest traps that new traders get caught in. In trading, is they get caught with that idea that that they can guarantee or that something should be guaranteed in there. It just doesn't happen that way, guys. Okay, you save yourself a lot of tears and a lot of wasted money if you stay away from that nonsense, and work on that risk management. My God, guys, risk management is the lifeblood of trading. Okay. All right. Hey, join us at howtradetowin.com. We'd love to have you there. As I said, we're going to be transitioning into a group coaching kind of thing on that. So a lot of great, exciting stuff coming up there. I've got a big announcement maybe next week, but I think I think it'll probably be 2 weeks, but maybe next week. So keep tuning in. Tuesday and Friday shows here. Yeah. And other than that, guys, just take it a day at a time. Don't be in a rush to do things. Look for some confirmations. Understand where your validation and invalidation points. Not just in trading, but in life. In relationships. And I'm not just talking about loving relationships. I'm talking about, family and friends and stuff like that as well. Okay? Business relationships as well. Understand when you need to do something different other than what you are. Okay? All right, guys. Hey, you guys have a great weekend. The rest of you guys that are in Discord, I will see y'all over there here in a bit, okay? All right, y'all. Take care.